Hey guys, Boris on CPK Forex. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar for October 30th to November 3rd, 2017. Euro crumbles, but dollar yet to rumble. That's really the takeaway of this story. Euro definitely broke every possible long-term and short-term support level. Fundamentally got crushed by the ECB this week and certainly was the star of the story. How much more we have to the downside remains to be seen. I think there's clearly a little bit of support here ahead of us. But the contrary story to that is that the dollar has yet to really pump itself up. While the market is certainly down on the ECB, it's not exactly up on the Fed. We're still doubting anything beyond December. Clearly, a December rate hike is now factored in. That should be mildly positive for the dollar. But when you look out at the yield curve, the big question is, will the Fed get tighter? And now we have a whole bunch of narratives going on aside from the U.S. data set, which is going to be very, very full this week, primarily being the Fed chair nomination. It looks to be that maybe Powell is now the leading candidate. Powell is sort of more in the Yellen camp of being a little bit more dovish, not necessarily a guy who's going to want to ramp up rate hikes very, very strongly. Warsh, who was really in the running earlier, was the guy who wanted to squeeze the rate hike machine until everybody yelled uncle. So if we get a sort of a continuity of Yellen, that really means data dependency, seesaw, inflation dependency, all those kind of wishy-washy things that don't really create a uniformly positive mindset for a dollar appreciation move. That's why the market actually kind of sold off today despite relatively good news on the economic front. So let's take a look at the levels first before we get to the calendar, and then we'll take a look at the charts, which are very, very interesting. So levels this week really moved down. I mean, Euro just crumbled. We're now 17 to 15. We used to be 19, 17, 200-point move in the week. Broke every support level here. We'll take a look at the charts. Broke the long-term support, which is very distributive top. It's clearly, to me now, sell the rally trade. Any kind of a bounce in the Euro. Euro basically... 17 is sort of the near-term resistance, but 18 is the hardcore resistance. I would sell Euro all the way up to 18 on any kind of a dead cat bounce rally here, unless we had some significant reason for why the dollar would depreciate. Any kind of a rally here is going to be primarily short covering. Dollar yen hanging tight. It's kind of breaking the hearts of both the bulls and the bears. Still holding on, still looks relatively good on the longer term charts, but just this pause at the 14, certainly not giving us a lot of power to believe that we have a breakout. Really need to, I'll show you on the charts, we really need to see a 1450 close on a daily basis to get a lot more confident the dollar breakout is for real. And cable, of course, marred in its own Brexit nightmare. Actually, it'd be interesting to see. I think. So this week we have a tremendous amount of UK news as well. And if that comes in dovish, I think this 130 is just begging to be broken. So I'm going to be watching that very, very carefully. So let's take a look at the calendar first, see what's going on. U.S. personal income, personal spending, that'll obviously be important. Look at a massive expectation. We're looking at 80 basis points on its personal spend. If that comes in, that's got to be positive dollar. Maybe that does set us up. We're bullish. Kathy's bullish on this. She thinks that it's going to beat or at least meet the expectation, which means it should be positive dollar yen going into the event. Then we're followed by a little bit of German CPI, which is mildly bullish, but not really. At this point, nothing really matters on the European side because the ECB essentially telegraphed to everybody they're not going to do anything as far as tightening monetary policy until September of next year. So 2018 essentially remains QE full zone out of the Eurozone. Next after that, we have employment data, GDP data. It'll be interesting to see how the European data comes up. It's certainly been some of the best growth they've seen in decades. The other story in all of this, and it's interesting because it's really not getting a lot of play, but it's finally started to have a dent in the euro, is the whole Catalan breakup story out of Spain. And the reason why I think it's not getting a lot of play is because while they declare independence, they declare autonomy, they declare so on and so forth, it's kind of theatrical. I mean, it's really not like Catalonia is going to be its own independent republic tomorrow. What they basically wound up doing now is creating a whole new set of elections in Catalonia. They disbanded the government. The Spanish government basically disbanded the Catalonian government, and they're going to call for new elections. It'll be interesting to see if this independent streak actually shows itself up at the ballot, because I think the province itself is sort of halfway split between hardcore independence movement and those that want to remain within Greater Spain. So we basically pushed the old statement, send the can down the road, right? And that's why the political threat out of Europe, not really that material so far, and not really having as much of an impact on the euro as, of course, the monetary decline. Then we get Chicago PMI on Tuesday. Then after that, we get the ADP actually on Wednesday, and we also get the manufacturing out of UK. So all of this comes up to sort of pre-non-farm payrolls on Friday and pre-BOE on Thursday. So we have this very, very powerful fundamental events Thursday, Friday that easily could be 100 points on each one of these currency pairs. We'll get ISM manufacturing. We don't get ISM services, which is a much more important report, until after non-farm payrolls. So they'll be interesting to see. But here we get the Bank of England bank rate. Market is looking for a bump. This is really interesting. Now, this will be interesting. What if they don't? What if they don't rate hike? Or what if they do and they say we're done till 2019? Either way, I think it'll be interesting to watch this. My vibe is it's going to be a more dovish statement, and it certainly could be a possibility where, well, I guess at this point the market is so gung-ho on a rate hike that it'll be shocking if they don't. But if they do rate hike, it'll be interesting to see how much of an impact that's going to have on UK growth, which are already starting to stumble as we get to the year end. So I really don't think, it can't win unless the BOE just simply says, yeah, we're hiking and we're open to more hikes because we see inflation as the ultimate problem for the UK economy. If they don't do that, it's very likely going to be a negative event for the pound. So watching that pretty carefully, and of course then with the granddaddy of them all, non-farm payrolls on Friday, huge event. What's interesting here is the market is super bullish. The recovery rate. Last month we had, of course, the hurricane-riddled non-farm payrolls, but the market is looking for a huge snapback. And I think that kind of expectation, the very, very large expectation, the larger the expectation, the harder it is to beat it. So I wonder if that's going to create too much of an expectation. I mean, what if we print 250? That's probably not going to be enough for the market to feel strongly. But ultimately, none of it will really matter except this. If this number comes in, the average hourly earnings comes in stronger than expected, it's looking for 30 basis points. If we come in at 50 basis points, that in many ways will be the single most bullish thing about the dollar we've seen in a long time. So it's all about the money. It's all about Jerry Maguire. It's all about show me the money. We've got the jobs. We need to have the money. And that's really what the market will be focusing on as the key fundamental catalyst for the trade. Now let's look at the charts here and just look at how we got decimated by the ECB this week. Look at this baby. So we've been talking about the distributive top in the euro for a very, very long time. We kind of held hope that support would hold. But once it didn't, it was pretty obvious that was it. That's all she wrote. Once we broke that 1650 support, we're now clearly in a downtrend. We now have a clearly, let me just get rid of this, all my wiggles. I have truly the worst visual skills of anybody I know. So here we have obviously lower high, right? And this is, I think, is the most important part. This is going to weigh on the euro. You really would need to have a remarkable, miraculous recovery for us to break out above the 1800, given the fundamentals factors that we have here and the technical breakdowns. So to me, whatever short covering rally we have, maybe the 1750, presents a very good opportunity to short into this dead cat bounce rally with a potential move back down towards the 1500s, ultimately, maybe even down to the 1400 level, which is the true support here after we broke out. Now, dollar yen, on the other hand, yes, looks positive long term, but man, does it look ugly short term. Look at this shooting star candle just died on Friday, just absolutely died. We end up on the frigging lows of the day after a great GDP print, all because of Powell and all because the yields go down. U.S. yields crumbled again. We can't get above 2.5. We can't get above 1400. That's pretty much the story on the U.S. side. The reason why we can't do that is because the market doesn't believe the Fed is going to do anything beyond December. So that's going to be very interesting. Now we have the Fed meeting this week. It's not a massive Fed meeting. It's not the quarterly meeting, so they're going to just simply issue a communique. But it'll be interesting to what they issue in the communique. If they sort of make this very very concerted effort to communicate to the market, hey, we are full on rate hike mode, and December is not one and done type of situation. Maybe that provides the juice. But what we need to do is actually see this juice be confirmed price-wise. We need the move to 1450 on a closing basis to truly show us a breakout of this thing. It's sort of like the reverse of the euro trade that we saw last week, where I said we got to see the break of the 1700s to really get confirmed that it's a negative move. Similarly, we need to see on the upside here a break of 1450 to confirm that this triple top finally goes, and we finally have a chance that this whole range breakout is going to start happening, and the market starts to feel confident towards U.S. rate hikes, and we start to go maybe towards the 120 zone as the year progresses. So that's story on the yen here. The jury is still out. We're still holding support. If we get a lot of negative news here, now this is the interesting part. The thing that really I think kind of destroys the bullish case is a dip below, really below 1250. I mean, you really want to make this was the prior highs that kind of sort of held, right? If we start dipping below 50, then what you have is a lower high and essentially a failed breakout. Just another failed breakout over here. All right, I will stop torturing you with my doodles here and move on. So last and not least on the majors, pound headed to 130. It is indeed. That was my column to my BK peeps a couple of days ago. It sure worked out that way. Let me just draw this out. So the thing, this is really, gets very, very interesting. This really depends. I mean, all of this ultimately will be contingent on what the BOE says Thursday, I think, in some ways, right? So we either kind of get a completely bullish mind cast out of the BOE that, yes, inflation is important. We don't really, the slowdown is temporary, and we are on a path to tighten monetary policy, which I put that at about a 10% chance. I may be 100% wrong, but I really put that at a 10% chance. My view is going to be much, much more dovish statement that sort of says, hey, we're going to do this hike because people expect us to, but that's it. We're done. We're going to stabilize the markets. That's going to be enough, in our opinion, to stabilize inflationary pressures. We're much more concerned about growth. And if that's the case, I think you see a big turnaround here, and the 130 will certainly be tested. That's a very, very big test, because if 130 starts breaking, then what you have is just the ultimate bullish nightmare. If you look at this on a longer term basis here, right? Let's just recap what happened here. You have this break of the 35s, which is the post-Brexit highs, right? Break of the 35, everybody gets super excited, and then that turns out to be a complete fake out. That turns out to be a complete fake out. We distribute, and then we can't even get up above the 133s. And if we start breaking down to below 30, then it's a very negative trade. And now we're right back into the 128, 127 category. So to me, cable is just ripe for a breakdown. All it needs to do is just have a little bit of a push from the Bank of England. That's how the week shapes up for the majors. Super interesting week, tremendous amount of trades into the end of the week on the majors and into the front of the week on the calm dollars. Well, that's what we're going to take a look at next. Boris, over and out.